So let's talk about what you don't know about taxes that is causing you heartbreak this season. So let's talk about the 3 tax tips every childcare owner, assisted living owner need to know before the tax season ends, okay? So most of you guys as providers are incredible at what you do. You build trust, you care for other loved ones, you keep families running and aging parents safe. You operate in one of the most emotionally demanding industries in the world, but when it comes to taxes and finances, most owners are flying blind and paying the price for it. Whether it's missed deductions, outdated strategies, or lack of financial systems, the result is the same. You're losing money you shouldn't be losing, and that's the pain point no one wants to talk about. So let's talk about it and let's fix it. Why does this matter for you as the provider, childcare owner, or assisted living provider? Even though the businesses are unique, you often run from home or shared use spaces, right? Your staff is a mixture of employees and contractors, and your revenue might be stable, but your margins are often tight. Whether you are in the industry of being a childcare provider or an assisted living provider, you serve vulnerable populations and you deal with state regulations heavily. You wear 10 plus hats daily and you still have to find time for admin. Now, all of that is a recipe for financial chaos if you're not careful, and it shows up hard during tax season. We're seeing it right now. So here are 3 tips you need to know and what it could cost you if you don't get these things taken care of. Separate business and personal finances, or you risk losing your write-offs. The problem is many care providers, you guys are using the same debit card for business groceries, personal errands, or worse, you have no dedicated business accounts at all. And the pain is you're losing clarity on what's deductible, and you risk IRS disallowing all of your expenses in an audit, and you also risk not being able to apply for funding or grants because your numbers are a mess. They're all over the place. So guys, you definitely need to stop commingling funding and use the business accounts for the business relations and personal accounts for personal relations, right? You need to have a structured payway on how you pay yourself. Stable, consistent. You're either going to pay yourself weekly, bi-weekly, monthly, right? You guys are failing to separate expenses. And one of the fastest ways to throw away your deductions and open yourself to audits and penalties is doing that. You don't want to wait until tax season to get your books together, and that's the problem. You guys avoid bookkeeping all year, and then March hits and you dump a pile of receipts or Excel sheets on your tax preparer and you hope for the best, and this is causing you guys to miss deductions that could have saved you thousands of dollars in taxes, but yet you're paying that out. You make avoidable mistakes that delay your refund or increase your tax bill, and you're also losing sleep, you're losing time, and you losing trust in your business, all right? A tax return is only as good as the books behind it. And if you're doing all of this last minute, that means you're not tax planning and you're not being proactive, you're reacting, right? So you need to set up your monthly bookkeeping with an accounting professional so that you can review your profits and losses quarterly, okay? This way you know what you spent, what you earned, and what you can afford to deduct in real time. This is gonna help you stop paying more than your fair share in taxes. And you also need to know what deductions you're missing, because it's more than what you think, and you don't know what's deductible, and your tax professional is probably too busy, not asking the right questions, and you're missing thousands of deductions that you legally qualify for, like mileage pickup, supplies, training, some types of meals, staff meetings, parent events, depreciation on play structures, beds, equipments. I'm just giving you some examples on all the things that you're missing, just, legal business expense deductions, and it's all just being overlooked because you don't have bookkeeping in order. You're just not in order, right? Staff appreciation gifts, onboarding expenses, and this is often causing you guys to miss what I would say $20,000 to $40,000 in annual deductions, combining to $50,000 plus. And when you miss that many deductions, that means that you're going to overpay in taxes 30 to 40%, right? So it's not about doing it all yourself. It's about doing it right. And you didn't get into this business to become a tax expert. Most of you didn't. But knowing what you don't know and getting the right help is the difference between scraping by and scaling sustainably. All right, and many of you guys are just scraping by year after year, and now when you know better, you do better. So let's get your books in order. Let's get those deductions that you qualify for, and let's get your pay structure working for you and not against you. So if this is you and you're needing assistance with this, there is a link below this video. Click the link, and myself or one of my staff members will reach out and we'll assess your situation.